We have Scott Bauer, he's the CEO of Prosper Trading Academy, joining us to talk currency. Scott, welcome to the show. It's good to have you with us to start the week. I'm wondering, Scott, if you're surprised to see the dollar coming off some briefly back to the 96 handle last week, lower in reaction to the Fed, the economic data that we've been seeing. What's got the greenback pulling back now?
Well, you know, we initially saw the dollar actually rally a little bit after the jobs number on Friday, but then we got weak manufacturing numbers again, and that really kind of hit the dollar a bit, and I think that is what people are looking at. So you have the combination of the Fed, like you said, and the fact that maybe we're not lowering rates, you know, anytime soon again here. I think the next projection is not until the springtime now. So you've got that pressure. And then again, that weak manufacturing number, even though the market and the economy seems to be hitting on most cylinders right now, especially still the consumer, that weak manufacturing space right now definitely has to be some concern.
Yeah, definitely. In addition to that, Scott, we also had a little bit of concern associated with the durable goods orders numbers recently, the retail sales numbers, and the personal income and spending, for the most part, not that hot. I mean, again, aside from the jobs, I mean, you can understand why the dollar's coming under pressure in some ways, tied to some of these economic concerns here, or to some of these specific numbers, at least, last week.
Right. Right, no doubt about it. And, you know, you still have to look globally what's happening everywhere else, and look at rate policies everywhere else. And we'll see later this week. We're getting policy news coming out of the UK and out of Australia. But you know, we'll see what happens. The dollar still is the go-to. The dollar still is the strongest currency out there. And, you know, we've seen it back off its highs, and for good reason, though I do believe that there is a floor here.
Yeah, you know, you mentioned you have to kind of take a step back and look around the world a little bit. I started to think a little bit about the British pound. You mentioned the euro currency, some of the Bank of Australia activity, and you also mentioned the Bank of England this week. I think that's November 7th this week. Australia's overnight, but let's talk about how the British pound saw a nice rally as some of this optimism associated with looks like a December 12th election, but at the very least, they moved away from that hard-nosed rhetoric associated with a hard Brexit, and that seemed to lift the pound, and ultimately that's weighing on the dollar, it seems like.
Yeah, that's absolutely what it is the rhetoric away from the hard Brexit. So, you know, we've seen the pound rally over the last month or so from, I think it was around 122 up to where it's trading now at 129, which is pretty solid, pretty strong. And again, most of that, Ben, as we talk about often, is the uncertainty that's come off of the marketplace, right? The market doesn't like uncertainty, and, you know, it sure seems like things are at least looking better for a softer Brexit.
Yeah, let's talk a little bit about some of the economic data, Scott, because for the most part, it's been pretty bad still out of Europe. Overnight, we had the German manufacturing PMI, the EU manufacturing PMI, and UK construction PMI. All three of those numbers actually inched up a bit, Scott, but well below the 50 level, that contraction level. I mean, again, I think it's a little bit too early to say that they're out of the woods yet by far. I mean, we'd like to see them get up above and through that 50 level.
Oh, it's way too early, especially coming out of Germany. I mean, we probably have to see the next 2 or 3 reports coming out at that 50 or higher level, you know, take it from contraction to expansion. But yeah, it's definitely way too early. Things are not good. Again, much like I was talking about the dollar maybe bottoming out here, hopefully we've seen somewhat of a bottom with some of this manufacturing activity coming out of the EU, but like you said, way too early to say we're out of the woods.
Yeah, especially with Mario Draghi on his way out, and I saw it looked like Christine Lagarde's going to be speaking today to the ECB, so we'll get a first little bit of information in terms of her position as far as interest rates and where she stands.
No doubt about it. All eyes and ears will be on Christine Lagarde today, and you know, through the policy meeting on Thursday. I don't think she's going to say much that's going to deviate from the policy that Draghi had in place. And you know, we do know that there is a lot of push and pull within the ECB policymakers. They're very divided on what the policy should be. I don't think we're going to see any surprises, though.
Scott, last question. Headed into the end of the year with the indices on new all-time highs, what's the most closely watched currency that you've got your eye on? Is it the risk off in terms of the yen and the Swiss? Is it the US dollar to see how it handles these new highs? What are you going to be dialed in on in the final 2 months of this year?
I think it really has to be the dollar, and obviously that's the easy answer, and I'm not trying to take the easy way out here, but it has to be the dollar because it almost seems like that's what is the underpinning, the undercurrent for every other currency out there. Yes, we can follow the risk-off scenario with the yen or the Swiss franc, but it's got to be the dollar. Though I will tell you, I'm very interested to see what happens with the Aussie dollar because they're so closely tied to China, and you know, we've seen a little bit maybe of fresh air coming out of some manufacturing numbers out of China, but that one's going to be real interesting to me as well.
Yeah, Aussie dollar is actually my chart of the day today. We're going to look at that a little bit later on as it's nearing key levels. You're dialed in on that as well, it sounds like. Scott, in terms of the dollar, it's not just the currencies. We'll be keeping an eye on that in terms of the ripple effect for the commodities as well. Multiple major markets watch the dollar, so I can understand why you're going to be as well. Traders, that's Scott Bauer. He's the CEO of Prosper Trading Academy. He's joining us to talk currencies here on a Monday.